Hello, it's Kei from Japan. In this video, I will be talking about the art of losing, because most of the people are struggling to win, and I think that's why you're watching my videos, to be able to win trades, right? But in this video, I'm suggesting you to think the other way around, how to lose ideally, so that you have another view to keep surviving from the market, right? So if you like this topic already, please press a good button, and let's get started right now. Like I said, almost all the traders focus on how to win trades and make money. And of course myself too. When I first started to learn Forex trading, all I was looking for was the winning strategy, like how to win money out of the market. And I don't think that's wrong. I mean, we are all here to make money by trading, and that's a correct motivation to keep you going. But today, I'm suggesting to see things from a different perspective so that you can notice some of the things you don't see when you only focus on winning. And that's about a mindset of how to lose ideally. I think those who trade with this mindset of how to lose ideally is very rare because, like I mentioned, most of the traders think how to win the game. However, just stop here and think about the fact that the majority of the traders lose trades and get kicked out of the game, and just think about the fact that the survivors of the market being minority. Majority of the traders go out of the game and minority of the traders survive from the market. And when you think about this fact, then why following majority who all line up and go towards this huge pitfall, right? But rather following the group of minority reasonably helps you to keep surviving on the market, right? Because no matter how much you follow the majority who are losing, you never win the game. But in contrast, going along with how minority of the traders think and learning how they keep surviving actually helps you to keep surviving as well. And in that sense, rather than keep on focusing on how to win, focusing on how you can lose ideally is the thinking pattern that the minorities have. And therefore, this is very important to think this way in Forex trading. And this is what I'm going to talk about today. So first of all, you might have heard of this statement, follow your own rule. And it usually continues, winning or losing doesn't matter. It doesn't matter as long as you keep following your own rule. You might hear these kind of things all over the place. However, to me, this statement of, don't think about winning or lose, but follow your own rule is in a sense too weak. I mean, why I think this statement is too weak is because behind of the words, there is still a psychology that you want to win if possible, right? Like as long as you say win or lose doesn't matter, I guess people think about winning losing chance is like 50-50 ratio because they use the terms win or lose. And when you think win and lose are a 50-50 ratio, then you unconsciously think, I might lose at times, but I want to possibly win, right? There's always a psychology of tug of war between winning and losing this way. And because of that, when you actually face the loss, you feel pain. So how can you avoid this feeling? And that's the main topic today. How can you avoid to keep thinking and feeling, I want to possibly win? It's actually by thinking, it doesn't matter when I lose because the game is meant to lose from the first place. In terms of the ratio, think that the game is like 80% losing and only 20% winning chance. And if you see the trading this way, then you believe that it's like you have a disadvantage from the start line. And why I want you to think trading like this way is because if you think like this, then the next thing you need to think of is where to place the orders so that I can lose ideally. Like not just focusing on placing orders and look for where to win, but focus on where to place orders so that I can lose ideally. And that's one of the ideas of minorities who keep surviving on the market. So let me show you some examples of this. For example, there's a concept of buying after pushback, right? And speaking of where to enter to lose ideally, let's say there's a bull trend like this. Lower high, higher high, And let's say you place buy here on this yellow circle. This is actually where you lose ideally, because when you place a buy here, first the stop loss is going to be very tight on this line A, where it's slightly below the previous low. So when the pushback were to fail and when the market starts to go down, then you get loss cut with very small pips. Or you can place a stop loss here on the line B, because when the price goes back all the way to B and it breaks it downwards, then most likely it shows it's the end of this whole bull trend. So I think the stop loss can be placed on either A or B to be able to lose ideally. You know, when you measure the pips towards B and you find it's acceptable to your risk in management, then you can place the stop loss there. But if it's not, then you can place a stop on A. But either way, when you place buy here, then you can lose ideally, right? Because when you lose, that means the momentum of the market will change. But if you don't lose, then that means the market continues its bull momentum. In contrast, think about what the entry would be that's not ideal. It's like the place like on this yellow box, right here. Why you cannot lose ideally here is first, if you place buy here, the distance to A is going to be far, and B is even more far away. Plus, when you think about the initial target, there's a recent high here, so this price level can be one of the initial targets, but maybe the price might be stopped at this level, you know, without being able to renew the high, and in that case, you will get less profit. So if you think about it, this area of yellow box is a very odd place to buy, because when you think that losing chance is 80%, and when it actually comes true, then you will lose big. However, the expected profit is relatively smaller, you know, so that means you cannot lose ideally here. But if you want to lose ideally under this 80% losing game, you must start to look for a place where you can lose, like this place on this yellow circle, because that way you know the momentum has changed on the market. This is very important, so if you don't understand what I'm saying, keep watching this until you can fully understand it, right? So next, let's look at this example, like this one too. Let's say there's a range in the middle of the major bull trend, and when you think the Forex is 80% losing game and wanting to lose ideally, where would be the place to be able to lose ideally? Think about it for a moment. Where would be a place to be able to lose ideally when the game is 80% losing chance? Well, one of the spots is the lowest of the range and the place the stop loss right below the range. Or another place might be when the price breaks the range upwards and mark the first pushback. This is also a good spot for buy, because although the distance to the stop loss might be a little too far, you still can assure that if the price breaks the A downwards, then that indicates the market will create another range, or it shows there might be a trend reverse to the downside. So next, think where you cannot lose ideally. Where do you think? Where would be the place where you cannot lose ideally when losing chance is 80%? It will be the place like here on the yellow box. This is just like the previous example, but why this is not a good entry is because this place is right in the middle of the range and the price might be resisted above the range. But the price has been moved up already and has some distance to the lower side of the range. So when you think about the Forex is 80% losing chance, you better wait until the price comes back to the lower side and place buy, right? But still, if the losing chance is 80%, then it might get loss cut, but you know the reason with minimum loss, right? And when you think about it, you never think of placing buy at the place like this on the yellow box. Alright, so in reality, of course the losing chance is not gonna be like 80%, it must be much less, but what I wanted to tell you today is the planned stop loss is as important as taking profit. You place an order because you think it's the right place, but when you lose, you get hurt psychologically and eventually blame yourself. But you know what? First of all, having confidence in Forex trading is wrong. because the momentum of the market is moving with the act of God, so to speak. Like it's something that a person cannot control, just like a natural disaster. For example, when you think about sports, your power of the strength or stamina or the spirit can affect and change the game. But when it comes to Forex trading, it does not relate to any of these. You know, no matter how much you have muscles and pump up yourself in front of the chart, you cannot change a tick in the market. So when you see yourself right and correct in trading, when you enter a way that you are doing the right thing with confidence, you feel an extreme pain when you lose as a result because you never have a control on the market. Remember, after you enter a market, everything will be unknown. And that's why I say it's very important to have a mindset of it doesn't matter if I lose in Forex trading. And that's why I kept saying, what if 80% losing chance? I'm not saying to be pessimistic, but I'm suggesting you not to be too optimistic. And that's why I truly believe planned loss cut is as valuable as taking profit. So yes, when your position gets loss cut, physically you lose money. But if you want to keep surviving on the market, you need to start focusing on where the ideal loss will be so that you can keep on trading and eventually it helps you to grow your account. Alright, that's it for today. From the next video, I'll be talking about how to manage your own money, money management in Forex trading. It'll be a series of 4 videos and I'll be talking about what it means to manage your own money, why it's important to think about risk to reward ratio every time you trade, how you can calculate them, and also some of the practical examples of how I manage my own fund every month, and also thinking to share my own profit management sheet that I'm currently using. So if you don't want to miss those videos, make sure to subscribe and hit the bell so that you receive the notification. And if you liked today's video, please press a good button so that I feel wonderful and keeps me going. Alright, I will see you on the next video. Stay gold. またね。